Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to the Chaos. My name is Brad. That is Fat Man Zoom. The stock market is crazy and chaotic, and we made it our mission to help you own it. Fat Man Zoom, hit them off with a start of 5.
Starting 5, we have Sam Cisneros, Mayank, Rudy Brown, Savvy Money Show, and Jeppy Jensen. Welcome. You are the starting 5. And before we get into it, thumbnail pose off. Let's go. Domo arigato, Mr. Roa.
Strike a pose. Strike a pose.
All right.
What we got?
Camera 1. We're gonna flip them around then, which you know right now.
Okay.
Under Armour's 5-year plan. Where can Under Armour stock go?
Ooh, I don't know what to do with that one. You do up, down, or up? I like that. All right.
All right. Camera 2.
Hey, how's it going?
Are we headed for another shutdown? If we are, here's what stocks don't. All right, we're staying with camera 2.
Oh.
Why video game stocks are getting hammered. Here's the best one to buy. Pulls his hair. It's a good one. All right, camera 3.
All right.
Robinhood blast past IPO price up 25% in one day. Ooh. Wow. Wow.
That's quite the O-face.
Guys, those are our topics for today. Welcome to Stock Market Live with Own the Chaos. We're here every Monday through Thursday from 3:30 p.m. Eastern Time until after close. We have earnings today that we'll discuss. Did you want to discuss pre-market earnings as well? I noticed the thumbnail had.
Yeah, we can.
We'll talk about some pre-market earnings as well. But we have those topics, which I think is a wide variety, should cover all of your interests out there in YouTube land. But before we get started, make sure you just like and subscribe. Let's not waste any time. Just give us that like.
I'll tell you what, Fat Man Zoom. I know that we've been on point with the calls to action for the like and subscribe and all that. Our crew, our viewers are just as good at it.
Yeah.
You guys are
Savvy.
awesome. You guys are awesome. Not just Savvy Money Show. We got a couple other people in here just going in on the super chats too. Hey, we appreciate the donations too. Whatever you want to throw at us, we'll take.
Well, before we get into it, I just wanted to ask how your portfolio did today. Did you get into anything? Did you get out of anything?
Today's a bit of a down day for me. I haven't bought anything just yet. I'm still just kind of waiting to see what direction the market wants to take. Mm-hmm. It's obviously clear that we're still seeing a little bit more of that July type chop. It's not necessarily as bad. Like, I don't feel like this feels as bad as it did in July, but it's still there. It's still present. And we'll get into a couple reasons as to why later in the show. But it's a down day. I'm not really all that worried about it.
Yeah, I'm a little bit bummed with myself. I need to do some recalibrating because overall, pretty good day for me. BP was my big winner.
Yeah.
I've been holding on to it, had a great earnings. They announced share buybacks, they increased their dividend, all that good stuff. Why I'm a little bit bummed is I had every intention to get into Under Armour. I had a Lululemon position, and I've talked about this on the channel. I was like, all right, I've made almost 30% on Lululemon. Let me flip that into Under Armour, which is what I'm trying to do more of, is like finding those opportunities in the same industry. So rather than hold on to like Lulu and Under Armour and Nike, just like kind of move from one to another. And I didn't do it, and there was no reason other than I just didn't find time to do it. And it would have been a great payoff for me if I would have done it.
Oh, yeah. Under Armour had a great day.
They had an awesome day. But nonetheless, still a solid day. Still excited about what we got going on and looking forward to it. Let's go ahead and let's just go into the pre-market earnings for today and discuss sort of what happened. Obviously, I mentioned BP. I'm excited about it. It's actually, I'm in Marathon Oil as well in my public long-term trading account.
Yeah.
But super excited about it. Although share buyback was good. I like that a lot. It was like $1.4 billion. The dividend hike, I know it was a dividend hike. It actually wasn't that big of a deal in my mind.
Yeah.
But the stock reacted really well.
I mean, a huge move on this. It's up 6.5%. Great trade on this, Fat Man Zoom. And we talked about the energy industry continuing to do really well. Sounds like all the right things are going for BP. Was Marathon Oil today, or is it tomorrow?
Yeah, I believe it's tomorrow.
Yeah, MRO is tomorrow, and then Occidental Petroleum is actually after hours today, I believe, too. So, pretty good moves for them. And the energy industry is only going to continue to do better in the second half of the year, I think, too. But yeah, great trade.
Yeah, Marathon after hours tomorrow.
Oh, okay.
After hours tomorrow.
Okay.
Yeah, excited about that. I didn't even look at Baba. I know Baba had earnings pre-market. That was the one that I was really interested in. I don't know where I've been today. I've been checked out.
It actually fell today, but they came in with some pretty solid earnings overall, beating expectations. And this is something that still, I think there's that sour taste in everybody's mouth with the whole Chinese takeover BS. So it's having a decent bounce back, and one could argue that maybe it's going to try to break back over 200, but 200 is going to be that magic number that needs to get over.
Yeah. Do you think? I mean, I think we did it on Sunday, and we had to do it on Sunday. I can't remember what you said, but
yeah.
Are you bullish on Baba or bearish on Baba?
It's tough for me to be either right now. I would venture to say that my inclination is to be bullish on it just because it's been beaten down so much. But this is really a coin flip as to what happens because it's all resting on the Chinese government, and I don't like that.
Yeah, that's true. That's understandable. So we'll see if it gets us over that $200 mark. Any other earnings that stood out to you as far as this morning pre-market was concerned?
None that I could think of other than those. Huge boner candle on a firm. Anybody? Let me see.
Somebody said it was halted, and then it's back and going crazy.
No way. Well, it's up 4.7% after being red today. Wow, what's going on here? Let's check out, see if there's any kind of news. Nothing yet. As soon as we get some news, guys, we'll let you know. But yeah, it is shot up. I don't know if this is maybe early earnings release or something, but a really big move on this.
Yeah, let us know if you guys have the news or know the news. I'm checking Twitter real quick, seeing if anything's on Twitter.
Holy shitballs.
I don't know if this is true.
Yeah.
I'm going to double check one more. It looks like Affirm and Apple are partnering on buy now, pay later.
What? Savvy Money Show says there's a rumor of a takeover.
Apple plans to launch buy now, pay later in Canada. I think in Canada is where they're partnering.
Interesting.
August 11th.
Interesting. So yeah, this thing shot up to almost $70 a share, $69.93. Oh, but man, yeah, that's interesting. Interesting to see that come out. So yeah, if Affirm keeps going, whew, that would be crazy if Apple and Affirm got together on anything. That should be a big deal. Yeah, pretty strong move of Affirm so far. It's pulling back from its 69.93 highs of the day down to 66.70. But man, what a change in attitude on Affirm today.
I mean, tell me about it. That's awesome.
Yeah,
that's big news. And I mean, I wonder if Apple's just trying to get Intel Recon for their buy now, pay later service, or they're just maybe taking them on a little test drive before they buy them. I mean,
that would be insane.
Apple has a ridiculous cash hoard that they could easily buy Affirm if they wanted to.
Yeah.
Wouldn't be out of the question. So this would be smart.
Wow, this is insane. I love it when we're live and shit like this happens.
Yeah. Yeah. Awesome. Good stuff for Affirm. You're still in Affirm, right?
Yes, I am still full position size in Affirm.
That's huge.
Yes, sir.
All right. Well, let's get right into, let's go to Under Armour earnings because it was pre-market.
Yeah.
Talk a little bit about the earnings, talk a little bit about the reaction, and then I want to talk about where it could possibly go.
Yeah, so Under Armour came in and crushed earnings expectations, beat on revenue, beat on earnings, and then earnings per share, and also raised their guidance. A lot of this has to do with the increase in demand that we're seeing. And we've been talking about this for months about revenge spending, about how many times have we said that people got money that they've been saving up over the last several months and really over the last 18 months, and they're out spending it like crazy. Not only that, but we really like the athleisure side of things only because you have youths going out playing sports again, and they need, gear and all that good stuff. So we've seen Lululemon knock it out of the park. We've seen Nike knock it out of the park, and it only made sense for Under Armour to do the same thing. And they're all seemingly following suit here. So this is a really great surge. Today, right now, it's up 6%. We take a look at the chart. This is on the intraday 5-minute chart here. Had highs of 1959. Fatman Zoom, in our Chaos Crew morning show, I ended up telling folks that, I really think this $19.80 mark is going to be the crucial spot for it. You can see that it topped up here several times and it got rejected on the daily chart. And so today it seems to kind of have followed that similar pattern. But I think once we get over that 1970, things should start to really get fun for Under Armour.
And that brings the question that I wanted to bring to the table, which is, where can Nike be? Where can their stock price go? And I want to look from a long-term perspective.
Under Armour.
Sorry, Nike. Under Armour. Sorry, I'm looking at this article.
It's okay.
So if you don't know the story about Under Armour and where it's at, so you have the Under Armour for the past decade plus has been trying to go up against Nike, trying to go up against Adidas and the likes, and really trying to compete on the athletic side. And that coupled with their CEO, their previous CEO and founder, Kevin Plank, they were looking for that angle. And it started okay, but it actually ended up being just a money bleed.
Yeah.
And so that coupled with the owner, founder, kind of, I think, getting involved in too many other things, lost focus of Under Armour in general. Once the new CEO came in, Patrick Frisk, there was a huge shift. Unfortunately, there was a lot of layoffs. There was some cutbacks, but there was a 2019 plan that was their turnaround strategy. So the 5-year plan in 2019, we have 3 years left, and I want to know where it can go in 3 more years, which is 2024. So the key focuses was really this was a move to make Under Armour a lifestyle brand. Obviously, you have Curry as one of the signature athletes left. There's not many, but a lot of his stuff is even lifestyle, leisure. He has his own golf line, right? I think Rock is the best example. Anthony Joshua is a boxer. Like, they're not sponsoring any of his athletic products. They're sponsoring like what he's hanging out in, leisure wear.
Right.
So I like the move that puts him more towards competing, I think, with Lululemon and like affordable Lululemon, which I've spoken on how I think they can compete, and I do like their products. But one of the big things that I want to pull up, and I want to pull the focuses that they have. I'm sorry, give me 1 second.
You're good. Snookeroo says you're looking good on camera, by the way.
Thanks, Nick. So they talked about dialing in their P&L. That was their biggest thing. Wholesale was one of the things that they wanted to really re-strategize their partners in wholesale and move to direct to consumers. But there were 4 areas that they were focusing on to strengthen the brand. That's the goal, all right? So the 4 are operating model, improving the operating model, operating efficiencies, focusing on direct-to-consumer channel, and yielding profitability across the company, and general just brand strength. Yeah. Those were the 4. I think we can agree that they are doing a good job of moving towards that. So if we're bullish on it moving forward, where can it go? Where do you see it going in 2024?
For me personally, I think looking at the price at where it's at right now at $19, it's still severely undervalued with what we saw from the last quarter and then this quarter and what they have going down the line. I think they finally started to pivot to an area that they know that they can compete in. You know, when Under Armour first started coming out, it was like, we're going to try to take over Nike. And it's like, it's just really difficult to do something like that. And so I think that they're finally in an area in which I think they can compete. And I could easily see in 3 years, I could at least see a 50% increase in Under Armour. So $30 plus.
Well, let's look at the daily. That's probably a better app.
So if we come out to the daily chart here, $30 plus could be where I could see Under Armour being at. And, again, that break over the $20, $19.80 more specifically is really going to be crucial there. But we come out to the weekly chart and it still isn't really quite above pre-pandemic highs. And if we're seeing numbers and sales numbers that are much higher than what they were pre-pandemic, it stands reason to believe that this should be much higher than where it is right now. So I think that there's definitely a bull case to be made here. This was as high as $42, $43 a couple of years ago. And I think that, with what they have going on right now and some of the sales numbers we're seeing, it would not surprise me to see us maybe potentially retest that over the next 3 years.
Yeah, and they're anticipating forward growth of 20% annually. So still looking really strong, and that could actually continue to grow. So we shall see. Don clearly not paying attention to what we said by his comment saying who's buying Nike over Under Armour. But guys, make sure you guys like and subscribe. If you want more content like this, hit the notification bell for those clips to come out. Moving on to the next topic, and I want to shout out Savvy Money Show for the donation, £5. Let's get this party started.
Thanks, bro. Get the donation train started, man.
Let us get this party started, and let's move on to the topic of everybody's fear-mongering, which is the Delta variant and a shutdown. So there's been a lot of conversations around mask indoor mandates, regardless of vaccination status. There's been some uproar about vaccine passports. There's been talk about what happens in the fall. And there is some certain fear about shutdowns. I personally don't necessarily want to speculate on that because it's anybody's guess. And honestly, in the chat, I would try to stick to stocks. Every time we have these conversations, I feel like people get a little bit off track and try to push their agendas. I think the point is that there's whether you like it or not, there's a real possibility that we could shut down. Or at least things will pull back. We're already seeing companies that are going, that are like pushing back their dates for stay at home and keeping people remote. What should people consider if they feel there's a risk that could potentially happen, or what are you looking at?
Well, I mean, I went into this, thinking like, is there a risk of an economic shutdown again? And I think there is a risk, but I think it's also very small. I think it's obviously something we should be concerning ourselves with, but also looking at some of the other outside global statistics to really kind of come to a realization is this going to be a long-term thing? And I think it isn't going to be a long-term thing, but it is important to also be well diversified. We talk about this, having, buckets of stocks that you think could go one way or the other. Some people approach this with what's called a barbell approach, having some of these COVID-related stocks and then the reopening plays. Make no mistake, me personally, and I think Fat Man Zoom would agree, still very bullish on the reopening and epicenter type stocks that have gotten beaten down as a result of the COVID pandemic is definitely still very much in play, and I would still remain overweight in those. That being said, if you want to take advantage of some of the short-term chop that we're seeing on the fear of the Delta variant and whatever variant comes behind it, I think that it's important to look at some of the stuff that's really gotten us here. You look at things like, and I'm not talking about highly speculative, high flyer tech. I'm talking about things like Zoom. Zoom Video, this is the perfect stock to be holding if you expect a potential shutdown or even a partial shutdown, or you don't. Because we've talked about how Zoom's going to be one in particular that's going to be around regardless of a shutdown or not. It's going to continue to benefit. We've talked about how remote work isn't going anywhere. And this is going to be one in particular that I think still does extremely well. We look at the chart and it's actually looking to start to form a cup and handle pattern on the daily chart. I really like this setup here, Fat Man Zoom, as it's continuing to hold above the 200-day moving average. And this is one that you can actually use to your benefit one way or the other. It's going to do really well if there's a partial shutdown or people are still working from home. It's going to continue to do well even when we have a fully reopened economy and the hybrid approach to work continues to stick around.
Yeah, I think that this is almost like a forced diversification strategy. It's going to be funny because I anticipate a lot of people getting hooked on like their belief on whether we should be shut down or not.
Yeah.
That's not the point. Like that really isn't the point.
No.
Honestly, the same people last year were saying we'll be open by June. Nobody really knows, and I think that trying to guess what's going to happen, regardless of statistics, is a futile effort.
Yeah.
And like it's something that like nobody can agree on in general, so what's the point? But what you can do is you can look at your portfolio and say, hey, if it does, then I have some stuff that should do well.
Yep.
And you should look at stocks that will do well, but if it doesn't, they still should be okay holds for you. And I worry that people are going to jump from portfolio to like with
bounce
the portfolio
around
from stock to stock, like, oh, I'm going to try to catch this and I'm going to try to catch that. This is forced diversification. So be paying attention to that. I am bullish on Zoom, regardless if there's a shutdown or not.
Yep.
But if there is, I'm hella bullish on Zoom.
Yeah.
So I'll feel good about being in that position.
Exactly. The next one for me is going to be DoorDash. Now, DoorDash, if you guys haven't, if you guys recall, actually had a really good earnings call last time they reported and has done really well since. And this is, during when people were started really getting excited about a reopening. So since, mid-May, this has actually been doing really well despite people being optimistic about a reopening. And so that also spoke volumes to me that habits were formed during the pandemic. How many of you guys actually took advantage of DoorDash or Uber Eats or something like that during the pandemic, and then you've kept that habit? You're like, you don't want to feel like going out or whatever. You can get a DoorDash to send it to your home. And I think that DoorDash is set up to have another really good quarter, despite a potential surge in reopenings. But also, if we are worried about any kind of partial shutdown or any kind of shutdown whatsoever, then DoorDash stands to reason to believe that they're going to continue to do well because one way or the other. I think that this is going to be another one that would be worth holding on to.
Yeah, DoorDash certainly should do really well. They're facing a similar challenge that Airbnb is, and I don't know if you've seen the ad campaigns as you're on social media, but with just getting drivers. And that's been a little bit of a handcuff for them. Yeah. If they address that, that could unlock massive profit potential.
Yeah, absolutely. The last one out of the three that I think are going to be the best ones to hold, whether or not we are in a shutdown or we continue to reopen. This is Walmart. This is something that actually has earnings this week, and we had it on Stock Watch Sunday. Walmart, in my opinion, has done, obviously we know that this remained open and they did everything they could for people that either wanted to drive by and just have their items dropped into their cars. Obviously the e-commerce side of things they've been doing really well on. And then I had this crazy pullback because everybody, I guess investors, and when I say everybody, investors in particular institutions, spun this narrative that because we're going to be reopening, Walmart isn't all of a sudden as valuable, which I don't think is true. But if we do end up seeing another shutdown or what have you, then Walmart still stands to reason to benefit greatly from this. And it's pulled back to a reasonable level that I think is also a decent buy regardless of what's going on economically. And this looks like a really good setup. I like it at the 141 support level, which is also representative of its 200-day moving average. And it just looks like a really solid spot for Walmart. I would be really happy, really curious to see what comes of their earnings, especially from what we've seen from Costco and some of the other big box stores.
Yeah, guys, that's what you got. Top 3 stocks look good. I like them. Make sure you guys like and subscribe. Also, how we doing on the concurrence? How many people we have in the house?
130 of you guys in here. We haven't had a like in about 5 minutes, which is kind of sad. We're on a win streak, guys. We wanted to try to get to 100 likes by the end of our streams, and we're 5 days in a row here. So let's get it to 6. We certainly would appreciate the support, guys. With 130 of you guys hanging in here, I think we can do it. Yesterday, we had a peak concurrence of like 150, and we beat that 100 like streak. So I know it's for sure possible.
That's awesome.
Yeah.
Next topic I want to talk about is the video game stocks getting hammered. And you brought this to the table.
Yeah.
Take-Two down 7%. Corsair's down 6%. EA down 3%. Zynga down 2%, trying to make a push back up. But a lot of the gaming stocks, Activision was down. Were down. Why are they? Do you know why they're getting hammered today? And in which stocks potentially could present opportunities?
Yeah, so one of the biggest reasons that a lot of these gaming stocks are down are the same reasons that we've seen Didi and Baba and some of the other Chinese stocks take a hit. And that is because there are some words that are being leaked out by major media companies from China that the Chinese government is looking to crack down on some of the gaming industry as well. They were using words like spiritual opium, is that gaming is online gaming is very addictive, and they want to establish regulation on these companies. And so since then, the Chinese government has made those companies pull the articles, but it was the damage had already been done. And so then they came out and reworded it. I guess it was a little bit nicer wording than spiritual opium and drug-like symptoms that are created by these stocks. And they have all come tumbling down. And so that is why we've seen a huge move down. And there's also the mix in there of earnings too. Some of them have missed. Take-Two had some not so great numbers on their earnings. And we have Activision today too that's reporting, but that's one of the big reasons that it's falling here. I think that this could present itself with a pretty decent opportunity with caution kept in mind, because we've seen what's happened to Didi and Baba and some of the other ones, but Tencent got absolutely wrecked. And Take-Two, obviously, EA Sports is down 3%. Corsair even down 6.5%. So these are all going to be ones to definitely watch for. And that brings me to the first stock that I think is worth potentially grabbing the dip on, and that is Corsair. If you guys aren't familiar with the stock or the company, this company provides hardware for gamers. So I'm talking webcams, all that good stuff, keyboards, you name it, they have it. And so this is a direct competitor to Logitech. So mouse pads and that sort of thing. It's been huge during the pandemic and has obviously been trending down, but this moved down because of the Chinese narrative that's being spun. Obviously, another one. The next one's going to be Zynga, Fat Man Zoom, and this has been an Only Chaos favorite for some time. This actually dipped down below at 965, was down as much as 5%. It's actually made a pretty decent comeback. Zynga, I think, worldwide is doing incredible, and I think that this is definitely a good opportunity to grab on Zynga. And then finally, EA Sports is going to be another one that I think, or EA Electronic Arts. I always say EA Sports because that's what everybody knows them for, but this is going to be another one that I think is going to be worth grabbing the dip on. I probably would stay away from Tencent because it is directly related to the Chinese government, or directly tied to the Chinese government, and some of the other more speculative ones I'm not sure I'd be a part of, but I like these three. And let us know what you guys think about it in the comments below, what your favorite ones are.
Yeah, guys, make sure you like if you like that content. And what do you think, right? I think Brad's smoking crack. No, I'm just kidding. No, definitely put in the comments. There's a lot of gaming opportunities and gaming stocks. I think as a whole, we're bullish on that sector. So it should be fine. Longer term, this could end up being the opportunity that's presented itself. Who knows? Maybe we'll get into some of that stuff. But those have been beaten down. A stock that has not been beaten down is Robinhood. Robinhood has just been on a monster move today, up currently at about 22%, blast past the IPO price of $38, and is on fire. My question to you is Robinhood ready for a bull run, or is this just a blip on the radar?
It feels like a blip on the radar. The reason this is moving today and it didn't move the other day was because Vlad dumped $275 million worth of stock on its IPO day. And now that's not in its way, we're starting to see some buying return. So I don't if you weren't in before, you're too late in my opinion. I wouldn't go chasing this thing.
What's your prediction on Robinhood stock as it goes towards its first earnings?
I mean, I think we just talked about, during their IPO about how I don't see how their business model is sustainable unless they come up with other sources of revenue. We talked about payment for order flow and how controversial that is. And this impasse that they're in, when it comes to gamifying trading and day trading, which there's nothing wrong with. But if you are already starting to spin this idea that long-term investing is the way to go towards millennials, that also hurts your payment for order flow revenue because people aren't going to be trading as much if you're encouraging them to continue to just hold on to their stocks. So they're going to have to figure out something, and I don't like that going into their upcoming quarter. That might not matter, but we'll see. That's kind of the thoughts that I have on Robinhood as a whole.
Yeah, I mean, Vlad dump in stocks could certainly justify moving down. A 25% move up, though, is a whole nother story. And I believe it was number one on Reddit trending, if I'm not mistaken. And so one of the concerns we had was in regards to how would the Wall Street Bets community respond, and would they attack Robinhood or would they get behind Robinhood? And maybe this is the first indication that they're actually behind Robinhood and they've forgiven them for their past transgressions. Maybe.
What do you think?
I think that I don't know if people moved away from Robinhood like they threatened they would.
Yeah.
And I feel like there might be a subset that were annoyed, but the reality is I think the inconvenience wasn't as great as like how much work it would take, or their frustration wasn't as great as the inconvenience that it would take to go to a whole new broker. And honestly, institutionally, there's distrust. So it's like, why change one broker to another broker that we probably don't just trust anyways?
Yeah.
So I feel like I could still see Wall Street Bets getting behind and staying behind Robinhood, especially with what move they did that I thought was good, which was opening up their IPO. I think that was a very smart move to open up their IPO to Robinhood account holders.
Yeah.
So that was a step in the right direction. They know what they need to do. It's just a matter of can they execute and can they change the perception.
Yeah, I agree. I like that. I like that take for sure.
And on the net note, the market is closed.
Yes, sir. The market is closed. We also have earnings that we're going to be reacting to. So there's 150 people in the house with 70 likes. We're 70% away to our goal, or 70% into our goal of 100 likes today. So if you guys could hit that thumbs up button, we certainly would appreciate it. We have SKLZ has earnings today. We also have Lyft that has earnings today, and quite a few other ones. Occidental Petroleum's one of them. What else we got, Fat Man Zoom?
We have, no other big, did you say Skills, Activision, Lyft? Yeah. And I think that would, Occidental, if you want to do that one. Yeah, I think those are the big ones.
Yeah, let's go ahead and bring up the Webull chart here. So we got Lyft that's reporting, no action there so far. Skills that's reporting, no action there so far. Oxy's another one. Used to be a favorite for Warren Buffett and is no longer in his portfolio, but we'll see how this one shakes out. Right now, it is just slightly down on no volume here. And Activision 2, ticker symbol ATVI, obviously got beat down today, so we'll see how this reacts after earnings. Activision's actually been it's been a PR nightmare for them. I don't know if you've been hearing about what's been going on with them, but they've had a lot of HR issues with equality and all of that. It's been pretty tough for Activision lately.
Yeah, and I don't mind if the earnings come out because I do want to talk about the news. For those of you who are just joining us, pretty big news coming for Affirm, which Affirm and Apple announced. It looks like there's potential partnership for buy now, pay later in Canada. So Apple's going to partner with Affirm to offer buy now, pay later services August 11th. This is huge news coming off of the Square Afterpay news. Affirm goes up 16% yesterday.
Yep.
Then today, Affirm's actually looks like it's staying in the red. This news comes out. How big of a deal is this? And could Apple end up buying Affirm just like Square bought Afterpay?
If this happens, I don't even know what I'm going to do, but it's going to be awesome if this happens. I cannot wait to see what takes place here. But yeah, Affirm right now, it's down a little bit on pretty low volume. It's usually what happens with Affirm. Characteristically, it goes all over the place because there's just no volume that happens to them after hours or pre-market. So it'll be interesting to see what transpires overnight and how people digest this. But yeah, man, this is pretty exciting news from them, especially after a kind of a down day for Affirm.
In their position, for those who are holding Affirm, like you're holding Affirm, this could present a tremendous opportunity because we talked about their market cap being $15 billion. The Afterpay acquisition was for $30 billion. Some could argue, and I would argue, that Affirm is actually worth more.
Yeah.
And so if you're a shareholder, you should be pretty happy about that prospect. I think there's a very good chance that Apple's taking it for a ride. test ride before it actually buys it. This would be a very smart move for Apple, who recently announced that they're getting into buy now, pay later, for them just to get a little bit of a head start, acquire a firm who has 32% of their revenue generated from Peloton, has a Shopify partnership. I want to say it's like 2,000 merchants are allowed to use a firm as far as their buy now, pay later services, and we're going to start seeing revenue. So this is early in the game. Apple making an acquisition like this makes sense, where they could get a little bit of a deal and also get ahead of the market. So I love this move by Apple just for Canada. And if they could buy it, I think it's a really smart move. Why wouldn't you do it?
I do too. Don Fry makes up a good point. Says Apple's going to use a firm like they did with Intel, then do their own thing. That would not surprise me. Apple's kind of known for doing that sort of thing, but we'll see.
Yeah, the only thing I see with that is you're talking about a product as far as like a physical product where people like there's
chips?
partnerships with the partnership with Peloton, like you automatically inherit that, and you're not gonna. It's not like Peloton's going to leave a firm.
Right.
They could theoretically, but it's unlikely that will happen. Shopify, that will not happen. And so it's a little bit different when you talk about chips for a product they have as opposed to a firm.
Yeah, I agree 100% with that. I think it'll be fun to just kind of see what transpires here. But either way, I'm happy that firm had a great ass day. But looking at Lyft after hours, it just shot up here. So I'd imagine that our earnings are in here for Lyft. And usually when you see Lyft do this, there's a pretty decent move on Uber, which we had on the watch list here earlier in the week on Monday. And it looks like it's also starting to get a little bit of a move on. That's usually what happens. Pretty similar to some of the social media platforms we'll see with earnings and how all the other ones respond. But so far, it looks like Lyft may have had some pretty decent earnings, as it was up as high as 6% after hours and now sitting here around 5.25%.
Nice. Looks good.
Pretty solid move. What are your thoughts on, as we wait for the numbers to come in, what are your thoughts on Lyft and Uber moving forward? You know, I never really cared for them from a long-term perspective, only because I felt as if you could see a company like Tesla coming in, especially with like robo-taxis, and just taking them over. They obviously have profit margin issues as well. What are your thoughts on just Lyft and Uber in general?
I mean, the model's smart. I love the model. I think they're going to continue to be around. As far as competition and other companies coming in, I think it takes a unique company. I don't think anybody can do it, but I do think there is a possibility that people can take market share. Tesla does seem like it's poised to potentially do it, but let me point something out about Tesla, where everybody talks about the robo-taxis in general. Tesla is notoriously, like, I don't want to say horrible, but they're not known for their customer service.
Yeah. Yeah.
And so I think that, like, one of the things with Uber and Lyft is, like, it's so easy to get a refund, like, to do all these things. And, like, they make it easy from the customer perspective.
Yeah.
And so Tesla's thing is, we're going to make our shit just so much better that you're going to use us. And so that's the one thing I worry is, like, the customer is what this is about. And you got to manage your drivers. Now, if it's a robo-taxi, you don't have that problem.
Right.
But I still think there probably has to be like potentially a mix of it as they enter into the market. We'll see, maybe not. But at least somebody that's got to be behind the wheel managing it. I'm sure local governments, even if it's fully automated, full self-driving, I think they're still going to make somebody be behind the wheel.
Yeah.
But I like them. I mean, even like, you know, crazy as it sounds, like an Apple has a community. They have a phone. They could potentially integrate with another company. But I think Uber and Lyft need to be bought by somebody. Yeah. And they have a better shot at making it if they can have somebody who has a little bit of a cash pile.
I would agree with that too. It just makes sense for a bigger company to own both of these and any of the other ride-hailing companies. Lyft came in, estimated earnings per share, a loss of 76 cents compared to a loss of 23 cents expected. So it looks like they missed on earnings. The revenue was what beat at $765 million versus $701. This makes a lot of sense. And I will say, you might be scratching your head if you're watching this. Lyft, Uber, these companies, they spend money like crazy. Mm-hmm. So it's not surprising to see more revenue. So that's growth, which investors usually like. Not surprising to see that, you know, the earnings per share is down because they just spend money like it's nothing.
Well, I have to imagine if it's moving, there's something else, because even though that is expected, that's a 200% miss.
Yeah.
Which either that means the stock's going to eventually move red, or there's something regarding guidance or something a little bit more optimistic in general.
Revenue beats by $65 million. Active riders up 3.6 million quarter over quarter versus a 2 million consensus. So that's definitely
that's a good number.
A big reason as to why.
Yep.
But still losing money hand over fist. And this is kind of one of the big reasons why I'm not a big fan of these, but obviously it seems to not matter, and it's continuing to move the stock here.
Yeah, how's Uber responding?
Uber is up 1.25%, so no surprise there to see that this is moving as well. And we'll just kind of see where this goes. It's up over the pre-market highs for Uber right now, and it was high as $44.42. This should have a good day. Uber has earnings on Thursday, which we will be live for as well at 3:30 p.m. Eastern time. So make sure you guys are subscribing, hitting that notification bell so you get notified when we're live. But this definitely bodes well for Uber. It'll be interesting to see if Uber actually comes in and beats earnings. If they came in and beat earnings as well as revenue and the active riders, that would be very, very big for Uber.
Yeah, and Uber's is actually tomorrow.
Oh, it's tomorrow.
Yeah.
Oh, for some reason I thought it was Thursday. So yeah, it's tomorrow.
Yep. Guys, we're almost there at the goal. Let's get that 100 likes. I'm not leaving until we get the 100 likes.
We got 83 likes here. We got 17 more to go. We were trying to get to 100. We're on a pretty hot win streak here.
So go ahead.
I was just looking. Activision came in with their earnings as well. Estimated earnings per share is $1.20 versus 75 cents. Pretty good beat here. And
Is revenue in?
I don't know if revenue's in just yet, but pretty good beat on earnings per share. It's up 1.5%.
Oh, gotcha.
Let me take a look here.
For the helpful people out there, I know you guys want to help and put it in the stream. Even more helpful if you actually give the revenue with the earnings per share, just FYI.
Yeah, it's not always enough that they just beat earnings, estimated earnings, right? So let's see. It looks like they raised their fiscal year 2021 guidance, which is good, to $3.54 from $3.42 a share. So also a good thing for them. Still not seeing any revenue numbers.
I have a revenue, but I need to know what the estimates were.
Yeah.
We'll get those to you guys as soon as we get the information in.
Yeah, nothing from them just yet. Just taking a look at the price action here. It is continuing to move up. It's now up 2.5%. Pretty good there. Boom, we hit 100 likes. Thanks so much, guys. 6 days in a row.
Nice.
6 days in a row. Thanks so much for the likes and the thumbs up. We certainly appreciate the love and support. As we wait for the revenue numbers, the rest of the revenue numbers to come in, Activision's up now 3% after hours. Pretty good day after quite an abysmal past week or so with Activision. It's been pretty tumultuous with them, with not only the Chinese rumors that were flying around on regulation, but also some of the harassment, PR nightmare issues that they were dealing with too. But so far, so good here after hours.
I do want to, Oliver Thorpe had brought a question, which was, do you think Apple would be interested in a firm for when they release their car, like Ford does with their credit? There's a great opportunity for Apple and a firm. That may seem, to answer the question, no. Maybe from a lending side, they could figure something out. But you got to remember that, well, I take that back. Yes, potentially.
Yeah.
Potentially from like a lease structure, not how Apple has their buy now, pay later setup. So I guess the answer would be yes. As it stands, no. So a firm would make sense to do it, because let's remember, I want to say, if I'm going off the top of my head, but Apple's buy now, pay later was like 4 payments, and I want to say it was 2 weeks. It's 2 weeks or 2 months. I can't remember. That's not enough to sell a car.
Yeah.
So maybe that is an opportunity, because a firm does do longer structure financing. So yeah, I think that's a pretty good call.
Looks like, and this is from CNBC's closing bell, their revenues beat $1.92 billion versus the $1.9 billion estimate.
Huh. Okay, good.
So pretty good beat from ATVI. And then they also raised guidance. It's continuing to move up here. It's 4.6%. Pretty good stuff. Lyft is still pretty green here. If you guys are just joining us, we're just giving you our live reactions to earnings here. Uber is still up on reacting to Lyft's earnings, and they have earnings tomorrow, so it'll be interesting to see how Uber continues tomorrow leading up to their earnings call. And then you have SKLZ. Doesn't look like their earnings are out just yet. Nothing from them, but Activision is on a roll. That's the big winner so far today, almost 5% up after hours, and boom, there it is, up over 5% after hours trading. Pretty nice move from Activision, which is a little bit of a surprise from the numbers that we saw from Take-Two, from the numbers that we saw from Microsoft, and the I guess lack of guidance, and then also poor numbers from like just demand in video games in general. It's interesting to see that Activision hasn't slowed down whatsoever, and they actually increased their guidance. So that's very interesting, and the stock is responding accordingly. Pretty solid move here now. It's starting to make its way towards upwards of 6% here in the green after hours.
Some people are asking about Drive Shack. There's been some questions about earnings. I do not believe they released earnings.
Yeah, I've had mixed reports on that too.
There's nothing on their investor relations page. I think some people were hearing like a speculation date.
Yeah.
Like essentially a guess based on their last earnings, but I do not. They haven't done it.
They haven't formally come out and announced when their earnings are going to be yet, have they?
No.
Yeah.
No. Their last press release on their investor relations page was mid-July. So
okay.
There's been nothing. So that'll be on their investor relations page. Set up your Google alerts.
Yeah. Here's the other thing about the Affirm thing, and I just wanted to backtrack there a little bit. Affirm's up another 2% here after hours. If Apple sees the trend and how fast it's moving, do you think this also has to do with just time in general? Like if they're moving to partner with somebody like Affirm, they know they can do it, but they just don't have the time because it's moving so fast. The trend is moving so fast, and they want to catch up with it. Do you think that there's something to be said for that too?
Yeah, I think so. I think that's certainly a possibility because in this space, it's not like what they're used to. Not only do they have to keep up with the trend, but they have to learn something new.
Right.
So why not?
Yeah.
I think it's got a pretty good reputation. I just saw it in another spot. Where was it today? I saw it. Damn, I wish I remember.
It's popping up everywhere.
Yeah, so they've already got inroads, and then you look at this kind of reminds me of Peloton's acquisition of Precor.
Yeah.
The main reason why they acquired Precor was because they already had a sales team that had made inroads with partners. And so not only the partnerships that Affirm has, but what are the partnerships that are in the pipeline? And clearly this is a strength of Affirm, which is getting companies on board.
Yeah. So
Apple could be like, well, this looks like a good sales team. We're the geeks, for lack of a better phrase. So let's get the cool guys to do the sales for us.
Right.
And we'll build it.
Right. Yeah, exactly. So yeah, pretty solid move from this. I couldn't be happier. My average price on this holding is $61.50. So pretty solid move for me on Affirm. I'm loving it.
Good stuff. What are you gonna do?
We can go ahead and cut it there, guys. Thanks so much for hanging out. So tomorrow we have lots of good stuff to talk about as well. Earnings tomorrow are going to be General Motors, GM pre-market, CVS, and Marathon Oil, I guess probably Royal Caribbean, also has earnings pre-market. So we'll be giving our reactions to that. But then during our live stream, there's also Roku, Uber, Etsy, Fastly, and Wynn Resort. So lots of good stuff to talk about and react to tomorrow. So really make sure that you're hitting the notification bell, subscribe if you're not already. And
we did get skills. I'm sorry.
Oh, we got skills.
I might as well just give them.
Yeah, so go ahead.
They missed loss of 10 cents was a consensus. They actually came in at a loss of 21 cents. They did raise guidance from 375 million to 376. I'm not sure if it looks like they raised guidance. The number seems weird, but they also beat on revenue by $1 million, which isn't a ton. 89 million in revenue, 88 million was the estimates.
Yeah. not really much of a reaction from anybody. It's down around 1.5% after hours, so not too much of a reaction there. But thanks for getting us those last minute numbers, Fat Man Zoom. Anything else from you?
Nah, man. Thanks for tuning in. We'll see you guys tomorrow, 3:30 p.m. Eastern.
See you guys. Bye.
Bye.